So on this episode, I'm going to be recapping 2024, what the year has meant for us in the property industry, what changes happened, and whether the predictions that we made at the beginning of the year actually came true. It's been interesting. I've just watched the 2024 market predictions video, and it's been pretty accurate. So stay tuned. I'll maybe explain why some of these things that we predicted materialized, and maybe some things that we missed, some trends that have emerged in 2024. Welcome to the Property Corner with myself, Rowan Alexander. So 2024 has been a pretty exciting year for the property industry. There were a lot of things that changed, especially regarding sentiment and market activity. It's been a strong year for the property industry. Especially in the Western Cape where we are based, and it's proven pretty exciting. In January, coming out of 2023, we came out of very subdued trading in November, December 2023. And in January 24, there was this light switch moment where the market just reignited. We were getting calls even before returning to the office early in January. Our phones started ringing, and we got the sense that 2023 had been hard on the market and people had postponed purchasing decisions. They just wanted to get the year behind the back, because when 2024 started, we couldn't deal with the volume of leads that were coming through it. We were just, overnight, the market activity just picked up big time. Now, what was interesting was that continued, for a reason we couldn't explain, we couldn't identify at the time. That trend continued up until the beginning of May, just prior to the build-up of the election. Now, whether it was part of sort of the election anticipation that there would be change in the country and so forth, we've tried to understand that a bit better. But definitely prior to the election, trading levels were very high. What did catch us off guard was that the beginning of May, that light switch turned off. And I think about the first week in May, all of our inquiries, all of our sales dried up overnight. And we understood that it was part of the elections and that election build-up and the uncertainty that was lying ahead. But we underestimated how dramatic that impact would be. And for the first time in my career, there was a very significant impact that the elections and the election results had on the property market. So that continued for the month of May. And upon announcement of the GNU at the end of May, that light switch turned straight back on. And since the beginning of June up until the end of the year, the market has been bullish and activity levels have been high. So it's just sort of a high level wrap up. But let's look at the things that we predicted going into 2024 at the end of 23 and see whether those things actually came true. As you know, making this sort of content isn't easy. We wouldn't be able to do it without the support of our local partners and sponsors. This episode is sponsored by Headzone Automotive Engineering and Workshop. Headzone does all automotive engineering, engine rebuilding, and motor vehicle servicing. Headzone is a family-run business and it's situated in Brackenfell, right around the corner from our business. They've been in the town for nearly 20 years and are well-known and established brand in the area. Headzone offers excellent client service, and they've recently gone as far as to offer all of our clients a free pre-holiday inspection. So go and check out their Facebook page to see what they're about for all your automotive engineering, repair, and servicing needs. So thank you to Headzone for sponsoring this episode and making this sort of content possible. So first off, we predicted that we would see interest rate relief, and we were pretty spot on with that. We projected that we might see it towards the middle of the year, but definitely having that interest rate relief towards the end of the year. Some people were calling it a bit earlier. We expected it to be later in the year, and I think we were right. Those timings played out the way that we predicted, and more so than the actual interest rate rand effect, the change in sentiment was something that we were looking forward to. We got the impression in 2023 that people were holding off purchasing decisions because they were hoping that the interest rate peak cycle would be achieved, and that would give buyer confidence and increase that sentiment. It definitely happened. So even building up to, the initial market projections were that we would see interest rate relief sort of middle of the year. With that happening, that build up, that whole media build up that we're expecting interest rates to drop, already increased buyer sentiment positively. And we saw that in trading levels. When those announcements didn't come in the middle of the year, as the majority of analysts had predicted, there was some disappointment. But at the end of the year, as the relief started coming through, we could definitely see the impact that it's had, and installing confidence in the buyer and people that are willingness to trade, because the feeling is that if you can make your sums work now in this environment, it's going to become easier in time. So definitely something that we were good on in calling at the right time, at the right point in time, and the effect that the change would have, not only from a monetary perspective, but also in sentiment. The second thing we said you should look out for was the continuation of semigration to the Western Cape. Again, that's a long-term trend. The Western Cape figures of semigration have been pretty accurate and they've been pretty stable. It's a continuing trend which shows no signs of slowing down. Something that I did underestimate, or that I thought would have happened earlier, was the attraction of provinces like Gauteng, maybe alluring buyers from some of the more rural provinces, your Limpopos and Mpumalangas. We expected more semigration to the Gauteng city hubs. So while the rural areas or the non-urban areas did see significant drop-off, I think their net movement across Eastern Cape, Free State, KZN, and Mpumalanga and Limpopo, I think they saw a drop between 9 and 15% of repeat buyers. So meaning someone who sells their 9 to 15% less actually repurchase in that area. So it's a net outflow from the area. The Western Cape has seen the strongest growth in that net growth again, and for the same reasons that have applied over the last sort of 10, 15 years, that the semigration has been so prevalent. And motivating factors still being safety, good quality education and access to education, a good, strong job market, the natural beauty of the province, and good governance. And all of these culminate in a better quality of life. And that's still been amongst all of the analysts and the surveys that have come about. That's still been the main motivating factors for people actually moving down to the Western Cape. If you look at the top 15 towns in the country that have had net increase from semigration, 14 of the 15 are in the Western Cape, and the 15th one is Jeffreys Bay in the Eastern Cape. And that's probably the closest you'll get to the Western Cape without being in the Western Cape. So pretty spot on there again, and a continuing trend. The question is, when will it stop? What will cause it to stop? I think the biggest threat to the semigration movement will be the affordability, the ability to make the move. So not affordability from a buyer pressures perspective, like we spoke about and are going to be speaking about more, but this is a direct replacement issue, where if you're selling a home for R1 million or 5 million rand or 10 million rand outside of the Western Cape and looking to relocate to the Western Cape, while currently we're seeing people selling properties for 4.5 million rand in Gauteng, moving from a relatively big house on a relatively big plot, moving down to Cape Town and maybe getting half that in size of property, actual size and land size. While they're still able to make those moves, but they have to scale down substantially. Going forward, I am getting concerned that they might even not be able to afford that, full stop. The sacrifice may become so big that the opportunity to make the move, completely goes out the window. So to those people that are moving, the earlier and the quicker they move, I think the more affordable and achievable the move is going to become. But to people to people wanting to make the move to the Western Cape and postponing that decision. I think it's going to become harder and harder and harder over time. And that's the only thing that I can think that at this stage that poses a risk to, or that would put a stop to that immigration, is the ability to actually afford the move. One of the third thing to look out for was buyer pressure, and a continuation of buyer pressure due to the rising costs of living, inflation. So even though those figures have started tapering off in the second half of 2024, the effect of the 2023-24 first half inflation and cost of living rises, in particular fuel, over that 18-month period preceding the second half of 24, food cost, fuel cost, interest rates, that put buyers under a lot of pressure, and homeowners too. Now, we knew that would continue, and we expected it to start showing some relief in the second half of 2024. And that's all played true. What we did, however, not anticipate was the resilience of the market, sort of above 3 million. That market above 3 million has been resilient from January right up until now. And the levels of trading that have been happening in the market above 3 million, I did not expect. So that market has surprised us, and we've been doing a lot of business above the 3 million rand market, more so than what we previously would have done. So that's probably the segment that's seen the biggest growth, and something that we were surprised by. We knew that it would come, but we thought that it would only come towards the latter half of 24 once interest rates started reducing. But that market was far more resilient than what we thought and understood, and they showed high levels of trading right throughout the year. The sub 1.5 million rand market, I think, is something that we maybe overestimated the resilience. So that might have been something where we had higher levels of trading and better prices being achieved leading up to 2024, and that market was the hardest hit. So that market has traditionally always been pretty resilient, because you always have downward movers, upward movers. It's been a sort of a transitional market, but first-time buyers had a lot of struggles in 2024. It was hard to get into the market due to prices, rising quite dramatically, with construction costs, escalating largely, high interest rate cycles, high cost of living. The market that was hardest hit was sub 1.5. We knew they would be hit, but we didn't know that they would be hit that hard. They were really hit hard. To give you an idea, maybe two figures that are standing out for me is the long-term average for properties that have been sold for financial reasons. So meaning that the seller, for some reason, can no longer afford, or is no longer comfortable. We're not talking about a distressed sale where a property actually goes to auction. We're just talking about the motivating factor behind the sale was a financial reason. The long-term average, I think this data has been tracked from about 2004, 2007, but the long-term average sits at about 18%. This year, that increased to 23%. That's a significant increase in motivation for selling. In the same way, your arrears figures have increased heavily too. So long-term average for mortgage payments in arrears, it sits at about 4.5% to 5% of market. That's increased to 7.8%. That's a very substantial increase. Getting close to almost doubling for clients that are in arrears with their mortgage installments. Again, probably finding that the majority of that is below 1.5, even maybe creeping up to the 2 million to 2.5 million rand bracket, where people are coming under a lot of financial pressure, not finding sort of leeway to be able to move, to make sacrifices, and having to sell their properties because they are falling in arrears and they are seeing no way to actually change that. So yes, interest rates have provided some relief, but like we predicted when we called that they would start reducing, we also did say that it wouldn't create an immediate change. It would be a long-term sort of more sentimental change, and that the reductions would take time to manifest and change in the market. Access to finance was something that we thought would increase, and it would become easier to get access to finance, and that's definitely been true. Most of the banks that we've seen throughout 2024 increased the threshold to which they would support 100% bonds. For instance, if they were previously only willing to give you a 100% bond up to 4 million rand or 5 million rand, those thresholds have been moved to higher values, maybe 6, 7 million rand. I think some of the banks are doing 100% bonds in excess of 10 million rand, as well as including a higher threshold for costs to be lent in addition to the purchase price. So you would hear something about a 105% loan or 107% loan. That's where you take a full loan on the property, and in addition to that, you lend the transfer and the bond registration costs too. Those thresholds have all also been moved up. So access to finance, not just because of interest rate relief, but also because of bank scorecard being more lenient, definitely been a ongoing trend. We've covered this extensively in a number of our other podcast episodes, and it's an ongoing trend. Maybe something that will start tightening up again in 2025 as buyers recover, but we're going to be doing a separate episode about the 2025 prediction, so let's not get into that just yet. Number 5, we expected a lot of construction to be happening. We called it the year of the build in 2024. And that was true too. A lot of construction started in 2024 where pre-sales had been building up, in anticipation of construction. And even more so, we saw a lot of people and a lot of developers and projects actually starting construction earlier than what they would have. So to give an example, if a project maybe has 100 properties and they needed to pre-sell 80 properties before the construction had commenced or could commence, we found a lot of developers actually pulling that trigger maybe at 70 sales or 75 sales before reaching the pre-sale number, simply to try and gain some traction on the construction side and avoid some of the building price escalations. So building prices escalated heavily in 2024. And one of the ways that developers tried to sort of absorb some of that pressure was to start with the construction earlier than what they would have. So definitely something that happened, and definitely something that's continuing. And again, like we said, like we called it, it doesn't mean that that there won't be new products coming to market. There are, and there continues to be new launches and new products being introduced. But we did anticipate a lot of construction happening, so projects actually coming out of the ground physically on site, and that has happened too. So the 6th item we thought you should look out for was the rental increases. We expected some heavy increases happening in the rental pricing, and that's definitely happened. The first half of 24, maybe not as aggressively as what we thought, but the second half of 2024 definitely coming through strong. So remember that this is still a correction that's happening due to the unnatural trading in the market post-COVID. So 2020, 2021, 2022 were periods where interest rates were low. So a lot of tenants opted to buy, and you had high vacancy levels in the market. Towards the end of 2022, that started drying up. Vacancies started minimizing to the point now where vacancies are at the lowest that it's been in a very long time. Certainly the longest that it's been since I've been in the property industry. So what's happened is that's given landlords the confidence to say, well, they can start making some recoveries for the losses that they've experienced over the last 3 years. So what happened was from 2020 to 2023, you were in a position where property pricing, mainly driven by replacement cost, construction costing, land escalations, property prices, went up. But your rental values sort of relatively flatlined because investors were scared of losing tenants because they were able to buy. So landlords, subdued their rental escalations. That created a big gap between achieved rentals and the cost of ownership. To give you an idea, if one of our corporate clients that own more than 1,000 properties looked at their portfolio recently and did an analysis that if they were to cancel all of the historic lease agreements and institute new agreements from now, their rental would increase by 17% across the board. Now, why does that happen? Because if you signed a lease in 2020 or 2021 at a conservative rental value, and you've been escalating that, conservatively, you'd find that you may only be achieving, let's say if they started off in 2020 at 10,000 Rand a month, and they've only escalated that to 10.5, 11.5, whereas in today's market, they might actually be able to achieve 13,000 Rand for that same property. They're sitting at an historic rental that's lower than what they would get just because it's naturally escalated than what they would get if they were to introduce that property to the market now as a vacant property. So that's giving landlords the opportunity to make some form of recovery and correction in the market. And that is a strong trend that's continuing. We're seeing it across all of our rentals. I do think that within the next 1 or 2 cycles of rental being increased, that would normalize again. So if you are a tenant or if you are a landlord, I think you can expect that to be maybe still this renewal cycle and 1 renewal cycle after that. And then from there, I think you'll start seeing, sort of escalations in line with inflation again. But we have been seeing it, and something that we think will continue is above inflationary figure rental increases. And remember that's to make up for the 3 years prior. And the last prediction we made was regarding the sales market and the return of the investor. We called it an actual, sort of creeping in and a return, indicating that we expected it to be slow. And it's maybe gone quicker than what we thought. I think especially in the second half of the year with the GNU, inspiring a lot of confidence, and the projections that rentals will increase and that interest rates would move towards a downward cycle. That has created a lot of confidence in the investor market. And as we speak now, we can actively see investors returning to the market at a more rapid pace. So for 2024 compared to 23, definitely there was more investors in the market. But every month that passes now, as confidence grows, as interest rates continue to go down and rentals continue to go up in pricing, the attraction in the investment side of the property market is definitely becoming more lucrative. And for that reason, we expect that to continue, and it has continued, or it has come true in 2024, and something again that we expect to see continuing. Again, in sales market, something that we maybe missed and that we didn't anticipate was those subdued levels of trading below 1.5 million. So investor market we identified correctly, but the sub-market effect, so the above 3 million Rand resilience and the below 1.5 million Rand, we maybe overstated or anticipated the resilience of that market. So I think all in all, pretty accurate, pretty good. As I say, exciting. Whether if you look at these things individually, if you find yourself a property owner or an investor or a tenant, you may look at these things and say, maybe not that good for me, or maybe brilliant for me, depending upon which side of the fence you're sitting on. But the important thing for me is that we're heading to a more natural and organic market. We're still facing the tail end of the effects of things like COVID-19 and the unnatural pressures and unnatural reactions that happened in market. And we're moving to a more organic state of market. Now, what I like about that is it becomes far more predictable. If you had spoken to me and been following our content in 2023 and the start of 2024, there was a lot of things that were difficult to understand and difficult to sort of interpret. And there was a lot of rapid movement. Definitely from the second quarter of 2024, things have been a lot more predictable, a lot more stable. And that also inspires confidence, not only in the buyer and the seller, but in operators and traders within industry too. And it becomes far easier to identify risks and to mitigate risks by putting certain or making decisions in a certain way. So, I'm excited that for 2025, we're seeing a build up for 2025 being a very good year for property owners in South Africa. So we'll be doing a separate podcast episode again where we're looking at the 2025 predictions, and hopefully we can get them as spot on as what we did for 2024. It's easy looking back and now, sort of saying we were clever and we called it. At the time, there was a lot of uncertainty, but you remember the property wheel turns slowly. So it's not highly likely that you would be caught off guard if you understand the market, if you understand the trends that are continuing, and you'll see that in our 2025 predictions video. A lot of these themes will continue into 2025, maybe with one or two things that we're identifying creeping up that would become more prevalent in 2025. But this will turn slowly, which makes it nice because you're able to predict more accurately. So looking at this wrap up, if you're a property owner or a tenant or landlord, investor, how did you find 2024? Did these trends prove true in your property journey? Maybe drop us something in the comments, maybe share some of your experiences and whether you saw this happening in your space. So if you've enjoyed this episode, if you enjoyed the podcast, please give it a like and a subscribe and share it with your friends. Thank you for your support.